You see these small private companies, right? And then seemingly overnight, boom, they're huge names on the stock market. How does that massive leap even happen? Well, that transformation has a name, the initial public offering, or IPO. And today, we're going to break down exactly what that means.
So let me ask you this. Ever wished you could have gotten in on the ground floor of the next tech giant or revolutionary brand? That dream actually becomes a real possibility for everyday folks like us at one very specific moment, the IPO. It's kind of like the key that unlocks the door. And today, we're going to show you how it works.
To make this all feel a bit more real, let's follow the story of a fictional company. We'll call them Future Gadgets, Inc. They've got this amazing new product, and they are absolutely ready to take over the world. But to do that, they have to take one massive public step. So let's find out what it is.
Okay, so what is an IPO? The name kind of gives it away, right? It's the initial public offering of a company's shares. For the very first time, a private company, well, it opens its doors to the public. It lists itself on a stock exchange, and that allows anyone, and I mean anyone, to buy a little piece of the business.
I absolutely love this analogy. Think about it. Before an IPO, a company is like an exclusive velvet rope party. You know, only the founders and some early investors are on the guest list. But after the IPO, it's a massive public festival. The gates swing wide open, and suddenly everybody's invited to the party.
So for our company, Future Gadgets, Inc., this is what that change actually looks like. Before, ownership was a pie split between just a handful of people. But after the IPO, that pie is sliced into potentially millions of little pieces. And anyone, you, me, our neighbors, can get a taste.
Okay, so that brings up a really good question. If Future Gadgets Inc. is already doing great, why would they bother with this super complicated, expensive public process? Why throw the giant festival at all? Well, it turns out there are some really powerful reasons.
And this really lays it all out. The biggest reason? Money. No surprise there. An IPO can raise a huge amount of cash to expand the business or invent new stuff. But it's also about reputation. I mean, being a public company just adds this layer of credibility that attracts better talent and bigger partners. And yeah, of course, it's a payday for the early believers who took a risk on the company from day one.
And it really all comes down to this one powerful idea. An IPO isn't just an exit strategy, it's a funding strategy. It's less about letting early investors cash out and more about fueling up the rocket ship for the next stage of the journey. The real takeaway is that it's about building, not just bailing.
All right, so Future Gadgets is ready. They're going to do it. But how does it actually happen? It's not as simple as just flipping a switch, you know. There's a formal, really highly regulated path they have to follow. Let's walk through those steps.
The path to an IPO is a full-on marathon. First, the company hires expert bankers to manage the whole process. Then comes the critical step, getting approval from the financial regulators. After that, they create this super detailed document for investors, they figure out a share price, and then they open the offer to the public. Once the shares are handed out, the company makes its big debut on a major stock exchange. It is a long, demanding race to that finish line.
Let's just zoom in on that prospectus for a second, sometimes called a DRHP. This is probably the single most important document for you, the potential investor. It's the company's entire history and future plans laid bare, the good, the bad, and the ugly. It's got their finances, their strategy, and, crucially, all the potential risks. It's pure transparency, right there in black and white.
This brings us to the million-dollar question, or, in some cases, the billion-dollar question. How much is one share of Future Gadgets Inc. actually worth? This isn't just a number they pull out of thin air. There are two main ways companies figure this out. So on one hand, you've got the fixed price method. It's pretty simple. The company just says, our shares are $20 each, take it or leave it. But on the other hand, and this is way more common these days, is something called book building. Here, the company offers a price range, say $8 to $10, and lets the big investors bid. The final price is then set based on where the strongest demand is. It's a way of letting the market itself help decide the value.
So as you can see, an IPO is so much more than just a financial transaction. It's really a company's debut on the world stage. It's that moment the exclusive private party turns into a public festival for everyone. It's a graduation, a premiere, and a bold new chapter all rolled into one.
So I'll leave you with this final thought. The next time you see those headlines about a big IPO, you won't just be a bystander. You'll actually get it. You'll understand the what, the why, and the how behind it all. And the only question left will be this. Are you going to be watching from the sidelines, or are you going to consider taking a seat at the table?